Breaking news here on Martyn Lucas Investor. The time has come once again for those very important FOMC reports. We're going to cover it live tomorrow. Here it is, the Fed FOMC report. You can already go to this video and leave a comment, a like. You can share it. You can click the bell so you're reminded of it. That's happening tomorrow. You cannot afford to miss it. The markets are a very mixed bag today. They're selling off. No surprise. We're not expecting a rate cut. We've had a rally the last couple of days as we have the last few months. My portfolio is all-time highs at 90,452. Absolutely wonderful, right? Looking really good. But the S&P is down. But it's a mixed bag. What might we get tomorrow? If we go through the portfolio, you'll see things with no money in high debt. They're falling through the floor. Virgin Galactic about to hit 50 cents. The S&P is going down but recovering. Amazon is down, trying to push up. Apple, though, on the other hand, is up. Tesla, no surprise, it's only worth $110. We've said it over and over again. You can buy all you like, but at the end of the day, it's only worth $110.
Tim Rogers donated $10 through a super chat.
Thank you very much indeed, Tim. He wants a review, which I will be doing very, very soon now. Nvidia is going up as well, but overall, things are down today. No surprise, tomorrow is going to be a very volatile day. We like it. It's what it's all about. Right, let me give you the projections for tomorrow. And before I do, please, if you wouldn't mind, tap in the like button and consider subscribing to the channel. There you go. Tap the subscribe button and give us a like. All right, here we go. So let's see what we might get tomorrow. I have said now for nearly 2 years, at least a year and a half, rates will come down in the summer. I believe that. I absolutely believe that. But tomorrow, not a chance in hell. Let's read the data that we have expected for tomorrow. Let me zoom it in as much as possible. I know you're trying to read off the screen. Fed policymakers continue to expect the inflation would return to 2% over the medium term, although recent data has not increased their confidence in progress towards the target. Minutes from the April 30th, May 1st FOMC meeting showed minutes don't do anything for me whatsoever. We already know this. This just repeats what we already know, and it's an opportunity for markets to react and dump and buy back. So not concerned about the minutes at all. The officials suggested that the disinflation process would likely take longer than previously thought, and some suggested a willingness to tighten policy further should risks to inflation materialize. There's no reason why the Fed need to raise rates. Rates have come down in Canada. Rates have come down in Europe. There's no reason to raise rates. You are putting pressure on the system by holding rates up for longer. There's no need to raise rates. Rates going up would be very, very negative for the markets, negative for everybody, and there really is no need. We can do the same damage just by holding rates for longer. So anyway, that's what I think anyway. As a result, maintaining the current target rate range for the federal funds rate at 5.25 to 5.5 was supported by intermeeting data. The dot plot, that's what we're talking about, indicating continued solid growth. The Federal Reserve kept the target range for the federal funds rate unchanged at 5.25 to 5.5. during its May meeting for the 6th consecutive time, as ongoing inflationary pressure and a tight labour market indicate a stall in progress towards bringing inflation back down to its 2% target. Now, we need to be absolutely clear. The measures that have been taken by the Fed take time, and they are lagging, all right? If you look at many of the metrics around the world, it's very apparent that the Fed is using an out-of-date system, the way to measure the economy. Other economies around the world, in Europe and in Canada, they're using forward-looking metrics. The Fed is using backward-looking metrics. So even though they think that things aren't doing that well, they're actually doing better than they think they are. and I don't believe there's any reason to have rates go up whatsoever. Anyway, so there it is. There's our position right now. So join us tomorrow for the Fed report. It's one you cannot afford to miss. We cover all of these live. They're very, very important. And the meeting afterwards, there will be lots of volatility tomorrow. I love it. I hope the markets crash 10%. I will spend more on margin and do exactly what I've been doing the last few months and the last year. And then it'll all bounce back again. I'm absolutely 100% confident about that. So join us tomorrow. You can click above my head for all the links, martynlucas.com. You'll find all the links on my social media. I will comment to everybody that's a member, and there's the VIP club where we got in-person meetings coming up once we get a number of people that are in our 2-year founder club. We're going to be very excited about that. I'm meeting up with Zach Zate this Christmas, so it's all starting to happen for the VIP club. Very, very exciting. Click above my head for all the links. Down below in the description, I'll also post the link for tomorrow, and over here I'll put the FOMC event here and a playlist that I think would be suitable down here. Check it out. Join us tomorrow. FOMC report, always a lively one. Take care of yourselves and each other.